Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associate with your financial market update for this Tuesday, and we are at the 18th of July, 2017, and the time about 3:40 p.m. Central Daylight Time. So here we are with the stock market that ended up, especially in the NASDAQ, railing right into the close as those FANG stocks, in this case Netflix, takes off to the upside. It added 5 million viewers, carried the day for that index. We saw disappointment early in the day, of course, off of the Senate unable to pass a health care vote even. Forget the bill, a health care vote to get the bill passed. Couldn't even get that. They knew they were going to lose. That took the markets down. So obviously where the market's at is, so far President Trump not batting that well. While he got a Supreme Court justice in place, that's about it if you really consider what's going on. His budget came out today, or the Republican budget came out today, and the difference between that and the CBO is going to be that the CBO is going to say very quickly that they only see a 1.9% growth in the near term. His budget's looking for 2% growth in the economy, 2.6%, and that difference is where he's seeing the savings made up in his budget, blah, blah, blah. That's the problem we're going to be dealing with, and that's for obviously the fiscal year that begins, I think it's this October. So let's see where that all goes and how we can get that part resolved. He needs a win somewhere because this market keeps pricing in really solid things for the president and the economy. We saw the dollar take it on the chin today, and most of the metal markets stronger. The bond market up, the 10-year note market up, so good strength there. We just saw the API numbers come out as literally I'm talking, and overall it was about a 6 million draw of distillates and gasoline. We saw a build in the crude oil stocks themselves of 1.6 million, 1.6 million barrels, but the others were the draw, not enough to get the market on fire, as you can see. I'm looking at the weekly bar chart on the S&P, and I'm connecting three lines here. And I'm calling that your uptrend line. So I'm going to leave that in place for a bit here as we look at this market. If you take that out, I'd get concerned. Until that's taken out, I think the market is still in an uptrend. As we see on the daily bar chart, that was the weekly, you can almost see how the market's got a stepping ladder to higher prices. Now, I didn't take a look, unfortunately, to see where was the 315 settlement in this market, but it's near unchanged to higher. If you take a look at yesterday's high, let's go right there, it's 2460.50. You hit that again today. So it's not going to be, regardless of that, an outside day to the upside unless late in the next few minutes the market's able to take that out, which is always possible. As you can see, you're knocking on the door of it as we're talking. When I take a look at the swing line, you have a pattern of higher lows and higher highs. Now, I don't know if this will be a low or not. If you take out yesterday's high, it definitively will be, and we're only a half a point from that right now. Don't know if that'll occur. We are over the 18-day average of closes, so the bias is up. So far we've got the swing line up, the bias is up, and the resistance is right here. This is where the battleground is. This is your upper Bollinger Band. That is why the market is fighting right here, trying to figure out, can it punch through that, or is that enough for the marketplace? We have to wait and see. But I'm impressed that here the president loses another battle and the market's at the upper Bollinger Band. Nothing that you have to shake your head at in a negative way as a technician. You are overbought up against an upper Bollinger Band. It's certainly not a buying opportunity, in my opinion, the way I teach trading. Now, the September Dow Jones slipped back, took out the lower Bollinger Band, went to the 18-day average of closes. That number's 21,401. You went down today to 21,416. So you just missed hitting it if you think about that. And at the end of the day, it's keeping this opportunity, and that's what we'll call this. You've got both numbers over 80 in the slow stochastic and the day before, not the day before. Tomorrow's very important. The odds favor tomorrow will not be an up day because that would give you the embedded reading. So that's how I look at that, and we'll see if that's right or wrong. In the NASDAQ, you now have a pattern of higher lows and higher highs, overbought into an upper Bollinger Band. The upper Bollinger Band number is 59.10. If you take a look, today's high is 58.94. So you're knocking on the door of that with an overbought condition. Doesn't mean you can't go higher, but the odds are the pros are going to peel money off up there. In the Russell, you haven't been able to get up towards that upper Bollinger Band, but you're still in an uptrend. Higher lows, higher highs, but very overbought. So we're in an area in these markets where you could get a setback just because you're in an overbought area. There's no sell signals in any of them, but a pullback probably in the cards. In the VIX, you refused to, again, make that break through these numbers. And if you follow and get my morning subscriber video, I've been really honing in on that, saying that the odds favor this market's going to try the upside. What you have to watch now is this. If you take a look at the embedded reading, you got it there, you have it here, and you have it here. So you have a fully embedded reading. The dilemma is, and I pointed this out in the updates, each time you're getting it, you're not really breaking down very much. You had it here too, and you didn't break on it. So I'm not putting as much credence on it as I used to just for the VIX, maybe because it had such a low number, maybe because we had the third lowest close in history down there and the market doesn't seem to be able to build on it. Doesn't mean I'm bullish, just means it seems to run out of selling. I can tell you why the September T-bonds had trouble. Look at the 18-day average, 153.24. You hit a high of 153.31, and that's where your battleground is. In the meantime, the market lost its embedded reading, made it back to that number, and the question is, what does it do from this point? The nice part is the market has shook off what the Fed has said about interest rates going up. Reuters came out today with a survey of analysts that put the odds strong that the Fed is going to announce something about a plan for tapering back their balance sheet in September. The markets absorbed all that. This is no news now. So, and you're still seeing interest rates fall at that point. Look at the 10-year notes. It has shook off that talk about the interest rate hikes. It has shook off the talk about the balance sheet reduction, and it's coming back into its own. It's certainly in an uptrend. You got higher highs, higher lows. You got upside bias, and momentum is pointing up and not overbought. Dollar index. I just got off the phone, not off the phone. I was on TV in Sky Business in Australia just a minute ago. And we were talking, I was with Natalie on there, and I was saying that no one's giving the president credit, and I'm not his speechwriter, I'm not sitting here with flags for him or against him. But I do think that one of the things that he said was the dollar was too high in November, and we're at new contract lows in this market. So he has, via his policies, whether you like them or not, or his losses in Congress, driven the dollar down. We're more competitive, and countries like the Aussie dollar, they're going to feel the pressure as they soared today, and the euro currency back up. I have a good friend that's in the business of olive oil, one of the largest in the world, actually. And he called me yesterday, wanted to know what I thought of the euro. I said, you've got to price into your business model that you're going up, maybe towards the 118 level when it's all done, but certainly 116 a given. And look at, you're back up now to 115, 115.92 and a half, so I feel good with what I told him. I don't know if we did that yesterday or the day before our conversation, because the market was closer to this number. And I feel good that I told him what that is, because currencies mean a lot in that kind of business. Here's the pound. Now, it had a heck of a day on the downside. The market lost its way with an uptrend, which should have been expected. You're overbought in the market, and that's what I was saying in the stock indices. You're overbought. So if I see a correction like that, not a surprise to me. You got to put the parts of the puzzle together. Do you really want to buy the market when it's overbought into a Bollinger Band? If you do, great. I want to be at the other side of your trades then. In the September Japanese yen, the daily bar chart is showing higher lows, higher highs. Now, your dilemma, gets to be in the euro and in the yen that the Bank of Japan and the European Central Bank both talk on Thursday. We're going to get their monetary policies. The markets don't expect any major changes at all from either bank, but they are going up. So what I wrote in today's report is what? Don't be surprised if you get to buy the rumor and then sell the fact as the markets run into some resistance points. The 100-day average in the upper Bollinger there is in place. In the WTI crude, as you can see, this market's fighting a battle, and it's having an outside day up. Now, that's important. So until today's low is taken out, this market is still what? Showing bullishness. The dilemma is you are getting overbought. The upper resistance is 47.62. We're getting to the higher part of the trading range. If I'm right, you're going to have trouble between here and the $50 mark on the upside, which is the $100-day moving average of closes. And, of course, with the OPEC meeting coming up, problems for this market. What do I mean by that? With the OPEC meeting, they're going to say, hey, they're not going to come out with anything that's bearish. The problem is little country, Ecuador, a member of OPEC, said today it cannot stay with its production cuts anymore. Now, understand this is a minor country in terms of oil production. I think they do about 526,000 barrels a day, but their economy needs the money. They're backing away. Now let's multiply that some of these other bigger producers. Are they looking at this and saying, how far can we go? Something you got to think of. They released the numbers today in Saudi Arabia on the energy, and it showed that for the May production, it was larger than July. And we've heard reports that June was even over numbers. We'll find out if that's truth or not. But just pointing that stuff out for you to think about. I just look at it as an uptrend. If you take out today's lows, don't be surprised if you fall back to the 18-day average of closes. The same thing is true in the gasoline with one key difference. That's how many days do we have of embedded. Let's look at today. Certainly both numbers are over 80. I'll stand here so you can see them. Day before and the day before. So you have an embedded reading. This market, if it takes that out, it's still a big-time warning signal. But until you lose the embedded reading, it could fight a bit. What else? The 100-day average in the upper Bollinger Band look fairly formidable here, but we are getting those draws in gasoline, and you'd expect that in the season. It just appears that the summer driving numbers showed up later. You know, I want to talk to you. You look and you see how I'm analyzing this, and, you know, we have viewers. It grows every month. People like what it is, but I want to teach how to do it yourself. Now, I started my charting course off in December, a brand new course at $69.95. It's now $99.95. It's going up in price right away. Take advantage of the $99.95. Here's what you get, and here's how I teach. I think there's about 6 hours of videos in the course. You see what I do in one video. I break it down into PowerPoint so you understand each of the indicators. We're talking swing lines, window envelopes, moving averages, slow stochastics, and Bollinger Bands. 5 parts. Each complements and filters the other. That is the idea. So you build it as a domino effect. You look and see what I do on one, you learn it, and then you're on to the next indicator. It starts off with swing lines, and moving averages are a filter of them. You see me talk about this here. You don't see window envelopes, do you? You don't see some of the little tools that I have that are there, and I won't show them here. I show them in the course. But suffice to say, the course, you start off with a PowerPoint video, and then I take you to a chart. And I often take off the name of the chart. You don't get to see what it is. And sometimes I will even take off the bar on the side for pricing. Other times I'll leave it on. I don't want you thinking we're talking gold or crude oil or whatever's going to sway your mind. I want you to learn chart patterns. Once you learn those and you practice those, I reinforce them because almost every morning I record a video covering 40 charts, and I cover these indicators. And on one chart I'll hone in on one indicator, one another, because I realize you're all at different points in the course, but that's how it works. It helps you, I think. You know, when I began in this business, I looked for certain newsletters to help my trading. You might want to consider that. You can call us. You can go to our website. If you go to the website, you go under the word education. It's all spelled out. You can click up here as well. It'll take you right to the pages you need to sign up for the course. Here's the one guarantee. I'm going up in price. Take advantage of it now. You have a great day, and I'm Ira Epstein.